Good afternoon all. Welcome to Black Bull Markets Trading Floor here from Auckland, New Zealand. A lot has happened this week leading up to a pretty monumental NFP reading this Friday. A fresh wave of dollar buying, and guess what's taking another beating? That's the Aussie and that's the Kiwi, down to 52-month lows. The Aussie dollar pressing on to the 70-cent mark. The Kiwi dollar breaking that all-important 65-cent psychological level. And we're seeing further moves to the downside of these pairs. This is off the back of Jerome Powell's recent comments, really sparking another wave of dollar buying, or in essence saying that rates will probably continue to increase above the neutral zone, and this helping Treasury bond yields also to break higher recently, remaining supportive of what we've seen over the last few months of this dollar uproar. Complete dollar buying, emerging markets suffering across the board, dollar getting stronger, the strength is not letting off, momentum is continuing. Recently though, overnight we did see a bit of a fall in the NZDUSD, however, the strength does remain strong to the upside on the US equities rather. Some people seeing it a bit toppy, but look, in this video we're going to be touching on key FX markets you should be watching during NFP over the next 24 hours. Hopefully this video gets to you in good time so you can start to map out your charts and put some trade ideas out there. Now, let me turn your attention to this Kiwi dollar chart. Now, as you can see, over the last 3 days, we've had a move that's gone over 1,500 points. And that started at the 0.66 level at the beginning of the month. And 4 days later, rather, we're seeing a big fall, almost, over 1.5% now, from the Kiwi. Again, Kiwi heavily pressured, really. And if we go onto a weekly chart, we struggle to find support. The only real level of support we're looking at is around this 64-cent mark. So a good 80 points away from where we are currently. So if this trend does continue, it's looking likely we could see this pair cross further lower. It has kept losing ground, and it's been the lowest it's ever been since February 2016. So again, the NFP announcement is pretty crucial in determining where we could see any near-term trends forming. However, with the NFP itself, actually, the expectation is for 185,000 new jobs, I believe. Last month, there was a positive result that was greater than the expectation. I believe it was around 191. Sorry, my fault. The expectation was 191k, and the result was 201, which was greater than expectations. Again, showing signs that US economy is doing well. ADP was higher. Services sector is operating at 11-month highs. The private sector is doing very well in the US. I believe orders from manufacturing are also up. So the optimism around the US economic data is strong, and investors are not seeing a reason really to sell the dollar and hold on to what's more seen as safe haven currencies like the ones in Australasia. So let's have a look at the Aussie. I know we did a video about 3 months ago when Aussie was around the 73-cent mark, saying from obviously the trade tariff talks that we could see pressure down to 70 cents, and look what we've got now. We've got this 70-cent zone, and it's a reality now. The US dollar is a dominant currency amongst your G10 currency crosses, and these two are really the key ones that are taking a hammering. On another note, have a look at this pound Kiwi chart. So again, this is from a bullish pound. As of late, we've seen some buyers step back up into the pound and bring it up above 130, and a weakening Kiwi, which is really a formula for a result that has pushed pound Kiwi above that level where it struggled to break a few weeks back, and that was around the 2003 mark, so only marginally above the 2 level, and now we've pushed right past that and operating at 2010. So if we look on a longer term chart, you've got some space there, in my view, to head up to this 203 level, which is the close of this high here, and that's going back again to 2016 April's. There's definitely momentum in this trade as well that could take it higher. As you can see, it was stuck in a range for the last year and a half between the 198, 186 level, and it's broken out of that range now. So it's an interesting trade and really showing that people are starting again to sell off these what's known as safe haven currencies and really get into the majors, get into the dollar essentially. And off the back of that, a lot of eyes are turning on to NFP today. So key trades that I'm watching personally is this Kiwi dollar position. Could we see a move lower to 64 cents? Well, I wouldn't see a reason not to if the NFP result comes out better than expected again and you see another wave of buying in the dollar. The technicals are all lining up for more bearish momentum in this cross, and 64 cents could very well be a reality. Also on the RSI, there's still space to move down. It's still not completely oversold. If you move on to a monthly chart, that again showing the indicator is not completely oversold. You are seeing a bit of a floor now as we speak, and it's just gone 2 p.m. in New Zealand on a Friday, so it might be Thursday still for most of you, or very early hours in the morning on a Friday. So still another good 10 hours to go until the NFP result itself. So it'll be interesting to see from what happens now until then, with European markets opening in about 6 hours or so. However, from what we're seeing now, the momentum is bearish, dollar is bull. Where is your money at? Well, from us here at Black Bull Markets, trade safer, and any questions, please do ping us. All the best.